We begin now live with a developing financial alert. This is your breaking report on two of Asia's often overlooked but increasingly scrutinized currencies, the Iraqi dinar and the Vietnamese dong. Viewers need to pay attention. The global exchange rate environment is shifting, and whispers have begun circulating through emerging markets, over trading desks, and in the corridors of policy making from Baghdad to Hanoi. We bring you the latest insights, delivered with the urgency this moment demands. This is not a routine market update. Tonight's developments carry implications well beyond sheer numbers on a chart. Behind the Iraqi dinar and the Vietnamese dong lie stories of economic resilience, stabilizing central banks, rising trade ambitions, and global interest dynamics. These currencies do not attract the media spotlight of majors like the dollar, euro, or yen, yet they are quietly at the intersection of geopolitical shifts, foreign investment flows, inflation management, and commodity transitions. That is why this briefing matters. Stay with us now as we peel back the layers and reveal what trading floors and policy circles are already whispering. We open with the Iraqi dinar. For years, the dinar has been loosely pegged to the US dollar. Modest, steady, muted. Yet behind that sheen lies slow-burning turbulence. High public debt, reconstruction needs, fluctuating oil revenues. Each surges or slumps ripple through projections and confidence. In the past weeks, market participants have begun watching a subtle shift. Official signals out of Iraq indicate caution, but not calm. The dinar's implied forward curve is showing a small but meaningful upward twist, suggesting traders are beginning to price in a modest devaluation risk over the coming months. That sounds technical, but it matters now. Dollars in the black market trading pits of Baghdad are changing hands at slivers higher than official rates. Nothing reckless yet, but enough to rattle nerves among regional FX desks. Meanwhile, the Central Bank of Iraq is not sitting quietly. Reports indicate that its foreign currency reserves remain under strain, with modest erosion picked up in recent weeks. Each sale of reserves to defend the dinar chips away at buffers, even if only slightly. Those monitors on Parliament Street in Baghdad are murmuring that reserve levels are approaching lower bounds of comfort. That is causing whispered concern. If pressure mounts, will policymakers hold fast to peg maintenance, or will hints of shift become outright moves? Now we turn to the Vietnamese dong. Here two whispers stir across Saigon's financial district. Vietnam's recent trade surplus has spiked, buoyed by surging semiconductor exports and electronics demand. That normally puts upward pressure on the dong. Yet, the State Bank of Vietnam's Forex intervention appears more aggressive than usual, with hints that it is mopping up excess dollars to prevent an appreciation. Why? Because even as strength benefits importers, it hurts export-keen manufacturers. The whispers say authorities are walking a fine line, allowing only limited dong appreciation while defending Vietnam's export pricing edge. Traders note that forward points in the dong market are shifting toward a weaker dong bias over one-year tenors. That suggests the central bank sees value in cushioning exporters from too strong a currency. In effect, whispers are revealing a deliberate bid to cap upward momentum, keeping exports competitive. That brings us to the core of tonight's flash briefing. The intersecting stories of the Iraqi dinar and Vietnamese dong are not isolated. They reflect wider emerging market currency management strategies in the face of uneven global recovery, rising rates in advanced economies, and shifting capital flows. Traders whisper about currency divergence. The dinar is showing stress from managed pegging with narrowing reserves. The dong shows deliberate resistance to appreciation amid export boom. Both are whispering that next quarter may bring drama. Let's ground these developments in voice. Imagine you're listening on your trading desk right now. Dinar trading desks watching Baghdad as whispers of reserve drain grow, and Asian FX desks as whispers of intervention from the State Bank of Vietnam slowly stabilize the dong's climb. Neither pause, neither shut down, both pushing, adjusting with increasing urgency. Tonight's whispers point to a delicate choreography. In Iraq, whispered concerns are building. If oil revenues falter or spending sprees accelerate, the dinar's peg may come under stress, something global emerging market watchers cannot ignore. If such stress emerges, they'll move quickly. More dollars demanded in parallel markets, further pressure on reserves. The central bank may cling to the peg or begin leaning devaluation, but either move will be watched closely. That whisper is the most notable to date. In Vietnam, whispers tell a different story. Exports shine, the dong threatens to strengthen too quickly, and the central bank is forcefully intervening to curtail that. Exporters breathe easier for now, but questions mount. How much longer can officials hold back appreciation before markets rebel, or inflation creeps upward? The whispers say resilience, yes, but also vigilance, and readiness to shift as trade dynamics evolve. In both cases, speculative capital will sense opportunity or risk. Floating rates, only partially managed, create fertile ground for forward traders and speculation. A rumor of dinar weakness could spark offshore carry strategies, though returns are muted by capital controls and liquidity constraints. The dong, on the other hand, may see carry flows if traders bet on central bank restraint easing and a pickup in carry yield differentials. That interplay between policy whispers and speculative pressure is part of why markets are leaning in to listen now. But let us pause for a moment and think broad. The global macro environment matters. The U.S. Federal Reserve continues signaling a phased approach to rate cuts, keeping dollar strength persistent. That external headwind feeds into both Iraq and Vietnam, complicating currency policy efforts. For Iraq, a strong dollar undermines export value and squeezes reserves, intensifying whispers of peg strain. For Vietnam, a firm dollar gives ground to defend the dong from appreciation too early, yet hampers overseas purchasing power for imports, hitting inflation. Policymakers in both countries are juggling multiple pressures, and traders can sense the weight. Another layer emerges when energy markets enter the picture. Iraq remains heavily reliant on oil revenues. If global crude prices slip, state earnings falter, rent revenues collapse for budget coverage, leaving fewer dollars to sustain the dinar peg. Conversely, surging oil prices could replenish reserves, calm the whispers, and help central bank credibly hold the line. That volatility is not hypothetical. Middle East geopolitics, OPEC decisions, EU demand swings, all play directly into the dinar's fate. Market whispers are picking up on faint tremors in oil sentiment curves. Exposure watchers are listening. Meanwhile, Vietnam stands at risk from global manufacturing demand fluctuations. The semiconductor cycle is strong now, providing export firepower. But softening demand later could reduce dollar supply. If so, central bank reserves may start to feel weighted. Whispers of overintervention could grow, and FX policy might tilt. Observers note that Vietnam has mitigated such risks before, but whispers now hint that global electronics cycles may be peaking. That is shadowing near-term forecasts for the dong. So what do we do with these whispers? Professional traders and institutional desks have begun to reassess positioning. The whispered narratives are material underlying dynamics that, if confirmed, matter deeply for both currencies. Term FX structures, forwards, options, import-export planning, sovereign and corporate risk analyses, all must adapt. From a strategic economic perspective, both currencies are quietly signaling transition. Iraq may soon face a tightening of its FX policy options, while Vietnam is actively refining its intervention strategy. These are not headline grabs, but they are loud whispers for those tuned in. Imagine you are an investor building exposure in frontier market fixed income. You now must weigh dinar-denominated instruments differently. Government bond yields may rise if markets begin pricing devaluation risk. Vietnam's bonds may see cheapening or hedging cost shifts if intervention tone evolves. Those are structural whispers with real cost implications for sovereign issuance and foreign debt servicing. Equally, multinational corporations trading between Iraq and Vietnam face subtly shifting FX frames. Contracts priced in dinars may require renegotiation if the forward curve drifts to reflect peg risk. In Vietnam, importers may pay the central bank premium to convert gauge dollars, affecting margins. Every whispered shift casts a ripple across business. Even remittance corridors can feel it. Iraqis sending funds abroad will find capture rates edging. Nothing drastic yet, but markets sniffing at rate mismatches in informal channels. Vietnamese overseas workers may chafe if the dong holds firm longer than expected, reducing inbound remittance value. That social whisper has economic weight. So here is the essence. The Iraqi dinar and Vietnamese dong are emitting faint but decisive signals. Whispered vulnerabilities in the dinar, whispered resistance in the dong. Each tells a different tale. A peg under pressure, a managed currency under containment. These are not broad EM trends. These are two precise stories demanding attention, and tonight they are whispering loudly. This map of whispering rates may not yet demand headline alarm, but ears are perked. The moment to listen has arrived. As policymakers in Baghdad and Hanoi weigh their next moves, global desks are leaning forward. The whispers could turn into price action at any time. Our call to you: dial into these whispers now. Review your FX exposures, carefully monitor central bank commentary and balance sheet flows, track forward curve shifts in both currencies, and adjust hedges accordingly. Keep a sharp eye on Iraq's oil income trajectory and Vietnam's export flow dynamics. These subtle signals could be early telltales of broader policy adjustment. We will continue delivering coverage as the story unfolds. For now, absorb this moment. The Iraqi dinar and Vietnamese dong are signaling through whispers, and listening may make all the difference. The global FX landscape often ignores these two, but today, they demand our attention. Thank you for joining this urgent exchange rate briefing. Stay tuned, stay alert, and when these whispers crystallize, we will stand ready to report.